Let me ask you a question, a real one. If 500,000 Naira in cash landed in your account right now, today, what would you actually do with it? I'm not talking about some wild business idea or what your friend is saying about the next big crypto coin. What's the real, practical move? Because let's be honest, if you just let that money sit in a regular savings account, with the way things are going, it's basically bleeding value day by day. What's going on, finance people? It's Josh here. Welcome back to JoshLM Finance. Let's break this down. Now, you know the drill. A quick disclaimer before we get into the numbers. This is all for educational purposes. It is not financial advice, so please always do your own research or chat with a licensed pro. All right, let's get to it. By the end of this, you're going to have a much clearer idea of what your options are with that 500K. So here's the game plan for today. First, we're going to define the problem. Then we'll look at the safe foundational plays. After that, the more ambitious moves. Then a really smart way to get into real estate without breaking the bank. And finally, the most important part, how to pull it all together into a strategy that actually works for you. Okay, let's start with the big, ugly truth. The problem is inflation. Simple as that. Every single day that your 500,000 Naira is just sitting there, it's losing its power. What you can buy with it today, you literally won't be able to afford in 6 months or a year. So the goal isn't just to not spend it. The goal is to make it grow, and to make it grow faster than inflation is eating it away. We're in a race, and we need to win it. So where do we even begin? Well, we start with the foundation, the safe havens. Look, these aren't the options that are going to make you a millionaire overnight. That's not their job. Their job is to protect your capital, to make sure your 500K stays 500K, and to give you some decent growth on top. These are the investments that let you sleep peacefully at night. All right, so let's look at the two big players in the safe zone. On one side, you have money market funds. They're giving you solid returns, somewhere in that 16 to 20% range. And the best part is, they're super flexible. You can usually get your money out pretty quickly. On the other side, you've got treasury bills, or T-bills. Now, the return might be a little bit higher, but here's the real kicker. For you as an individual, it's tax-free. The catch? Your money is locked up. It could be for 91 days, 182, or even a full year. So that's the big trade-off you have to decide on. Do you need the flexibility, or do you want that guaranteed tax-free return? So, who should be looking at these options? Well, if you're just starting your investment journey, this is the perfect place to start. If you're building up your emergency fund, a money market fund is fantastic because you can access the cash if you need it. And honestly, if you're the kind of person who just hates drama, you don't want the stress of checking prices every 5 minutes, these options give you predictable, peaceful returns. I love this analogy because it's just perfect, especially for T-bills. It's like that wedding jollof. It's not some new, flashy, experimental dish. You know exactly what you're getting. You know it's going to be solid, it's going to be reliable, every single time. It just works. You just have to be patient enough to wait for your turn on the queue. All right, foundations laid. Now let's talk about adding some spice. We're moving into the growth and grit plays. Now these are going to require a bit more of a stomach for risk, and in some cases, a whole lot more of your actual personal effort. But the potential reward on the other side is significantly higher. So if you're feeling a bit more adventurous, this part's for you. Let's look at what that higher reward can look like. With Nigerian stocks, say you invest in some solid banks. You're making money in 2 ways. You get dividends, maybe around 9 to 10%, and you get any growth in the actual stock price. Now, compare that to something like agriculture. A really well-run bell pepper farm, for instance, could bring in profits of 20, 30, maybe even over 50%. But, and you have to hear this, one bad harvest, one disease, and your entire investment could be gone. The potential is high, but the risk is just as real. And this is absolutely crucial. Let me say it again. This is not passive investing. Those huge returns from agriculture or maybe starting a small online business, they come from your sweat, your time, your effort. Using 500K to source products and run an e-commerce store isn't just an investment. It's a job. You are the business. So you're not just investing money, you're investing yourself. And that's the trade-off for those higher returns. Ah, yes. This one really captures the feeling of investing in the stock market here, doesn't it? Some days you're on top of the world, celebrating a huge win. Other days, man, you just let out a deep, deep sigh. But the point is, if you're a long-term believer, if you pick quality companies and you stick with them through the ups and the downs, history shows you're very likely to come out on top. Okay, on to our third category. Everyone wants to get into real estate, right? It feels solid, tangible, but let's be real. Buying a plot of land or a house with 500K, that's a tough one. But what if I told you there's another way in, a much smarter, more accessible way? And that way is called a REIT. It stands for Real Estate Investment Trust. Just think of it like this. It's a massive company that owns and manages huge properties, shopping malls, office blocks, apartment complexes. And you can buy shares in that company, just like you'd buy shares of a bank. So instead of buying one whole house, you're buying a tiny piece of hundreds of properties all at once. You can check out options like the SFS REITs or the UPDC REIT, right on the Nigerian exchange. So how do you actually make money from this? Well, there are two main ways. First, the REIT collects rent from all its tenants and pays a portion of that to you as dividends. On a $500,000 investment, that could be around $40,000 a year, give or take. But that's not all. As the value of those properties goes up over time, the price of your share should also go up, so you get cash flow and potential growth. And honestly, this is the best part. You get to be a landlord. You get the benefits of rental income and property appreciation, but you don't get any of the headaches. No midnight calls about a leaking roof. No chasing down tenants for rent. The company's professional managers handle all of that. You just sit back and hopefully watch your investment grow. Okay, we've got our safe jollof rice. We've got our spicy high-risk plays. And we've got our smart slice of real estate. Now for the most important part. How do we put this all on one plate? The single biggest lesson here is an old one, but it's true. Don't put all your eggs in one basket. You need to diversify. So let's walk through a sample portfolio. Now remember, this is just an example to show you the thinking. It's not a direct recommendation. You could put a solid chunk, say 40% or 200,000 naira, into a money market fund. That's your stable foundation. Then you take another 30%, 150,000 naira, and put it into some quality Nigerian stocks for that long-term growth. And with the final 30%, you could either go for T-bills for that tax-free income, or maybe a REIT to get that real estate exposure. You see what's happening? You're balancing safety with growth. That's how you build a portfolio that can handle whatever the market throws at. And this quote right here just nails it. The Nigerian economy, our market, it can be as unpredictable as trying to get across Third Mainland Bridge at 5 p.m. You can't just hope for the best. You don't need luck to get through it. You need a plan. You need structure. And that balanced, diversified portfolio, that's your structure. So the real question I want to leave you with is this. Looking at these options, how are you going to structure your money? Take some time, really think about what you want to achieve and how much risk you're comfortable with. There isn't one perfect answer for everyone, but if you build the right structure, you can put that money to work. Thanks for watching all the way to the end. If this helped you, you know what to do. Hit that like button, subscribe, and maybe share it with someone who needs to see it. I'll see you in the next one. Take care. Peace.